All right, it has been a big week for Bitcoin, notching new record highs in price. But our Kate Rooney is taking a look at crypto traders taking on less risk than they did in the prior run-up. Kate?
That's right. Hey, Mike, Bitcoin traders are taking on less risk, and some see it as a sign that crypto markets are less frothy, at least than they were earlier this year, and that the market structure is becoming more sustainable. This is based on Bitcoin leverage ratios. There's a couple different ways to calculate this, but for Bitcoin, Fundstrat looked at the total futures open interest divided by the number of Bitcoin on exchanges. So the leverage ratio for Bitcoin is at a high for the month, but is, quote, considerably lower than levels we saw earlier in the year. If you take a look at that chart, and this is according from data from Glassnode and from Fundstrat. If you look back in May and early June, the leverage in Bitcoin markets essentially fell off a cliff as people sold out of a lot of their positions. Bitcoin at the time lost about a third of its value over just a couple of days, and that when that was happening, it has been a key driver of some of the volatility we've seen in Bitcoin. Those aggressive declines were driven by traders, in some cases, taking on 100-to-1 leverage. That changed, though, back in July. Two of the biggest crypto exchanges, FTX and Binance, limited traders to 20 times leverage, down from more than 100 times. And another sign the market might be maturing, there's more long-term holders at this point. That's defined by Bitcoin being held for 5 months or more. It's at another all-time high at 71% of all of the circulating Bitcoin supply. Still, though, analysts say these price moves mean that there are definitely some traders still chasing leverage. They're looking for more upside as always, and analysts are looking for any other signs that the market is overheating, especially as Bitcoin hits a new all-time high this week. Bitcoin, of course, and the whole crypto market is known for booms and busts. Guys.
Yeah, Kate, so I guess only 29% of all Bitcoin are being kind of turned over in less than 5 months. I guess we can call that, maybe a little more stability than there was at one time. Of course, this all comes, these measures of leverage and things like that, as we do have these two new Bitcoin futures-based ETFs begin trading this week. Today's Valkyrie, we had ProShares out there, attracted a huge amount of assets, and I think it's also raising questions as to whether these funds will end up being a huge percentage of the futures volume, maybe hitting position limits, maybe going to sort of change the overall dynamics in terms of tail wagging the dog in the market.
Yeah, and a ton of interest. By some metrics, it's broken records in terms of a new ETF on the market. And I think the more Bitcoin old school buyers are saying, it's not the best way to get exposure. You have things like rollover costs, and it's more expensive. It trades at a discount. And so there are still some that are holding out and saying, this isn't the easiest way to buy. And others are saying because you've got the PayPals and the Coinbases of the world making it easier, they might not be looking for an ETF, but you're completely spot on there in terms of institutional interest and ushering in sort of a new type of buyer versus those who might be looking just for the quick trade.